Just a little disclaimer before the video starts. These are all my opinions. I am not a financial advisor. Let's get it. What's up, y'all? I know you're looking at the title like, what is he talking about? So let's just jump into it. You got a few different types of dividend stocks. You got quality ones like SCHD, which maintain their price and pay out consistently. You got dividend traps like KBWD, which pay a high dividend but never maintains its price. Or the complete opposite, like FDVV, which pays a good dividend and tends to go up in price. Then you got rare gems like ARCC, which pay a high dividend and historically have maintained their price. Well, guess what? The S&P 500 beats all of them by a long shot. Even the best one out of the bunch, ARCC, with an 8% dividend and a share price of $20, still underperforms the S&P 500. Because you got to remember that 7 to 10% per year average is just an average. The market actually performs much better than that. And it's not just the S&P 500, it's the total market. Like, you could look at ETF VTI, which bundles all the publicly traded stocks available in the US. If something that diverse is beating dividends, then what's even the point? Dividends are geared toward people who are already rich and they can afford to live off of a percentage of their investments. Instead of selling a small portion of their shares, they can receive dividends and have their money pay them. Instead of selling shares, they can just sit around doing nothing, basically. But this only works if you are like a multi-millionaire. Anything less, and you're just gonna hold yourself back. I know there's a ton of videos all over YouTube talking about SCHD is the best and this and that. And I agree. It is the best dividend stock. But why would you waste your money on it right now? Let your money grow in a real index, a real ETF. Then, when you get real money, then you move it to SCHD and you live your life. You're not locking in a cheaper price by buying it early or buying it now. All you're doing is missing out on actual gains that are happening in the now. For example, the beginning of 2025, with all the market fluctuations, how would a dollar cost average plan work in each scenario? SCHD would be in the red year to date, but the S&P 500, you're up about 5 points, and if you bought during the dips, we're talking way more than 5 points. That's just year to date. I know some people will say SCHD brings in consistent income and blah blah blah. Who cares? The yield is 4%. What is 4% gonna do for you? $3,000 is just gonna make roughly $100 off of SCHD in 1 year. $3,000 in QQQ or SPMO, that's going to obliterate SCHD returns. You would really need to make multi-millions just to make this work. Like $1 million in SCHD is going to give you roughly 30 to 40K per year. Now, you could scrape by on that, but you're not living fancy. You have $1 million in the bank. If your goal is just to scrape by on 30, 40K a year, then work in McDonald's, dog. It's like, even if we're facing a bear market, you can make the argument that SCHD will pay out consistently during that bear market, but overall, you're going to come out way better if you just buy the dips during that bear market. These dividend stocks are really not worth it, in my opinion. The money just doesn't add up. The math isn't mathing. Math is math. Straight up, if you want to retire early, dividends is not going to help you at all. Take your money and invest it into high quality growth.